A few people in the comments have asked me what my portfolio looks like. I discuss many stocks on this channel. Some I buy, some I pass on. But today, I want to share how my portfolio is currently structured. I also want to give an update on what my short-term plans for my portfolio are, as well as what is on my watch list. And of course, I would love any feedback on how it is constructed. Welcome to The Quality Investor. I've been in the stock market for many years. However, I began choosing individual stocks in early 2023, along with some funds I already owned. It is something I studied for a while, but when I finally started making buys, I haven't looked back since. And I started this channel as a way of sharing what I've learned along the way, as well as picking up some ideas from others. First, I'm going to go over my holdings as well as returns and give a brief explanation as to why I own what I own. Secondly, I want to discuss what my short-term plans are, along with what's on my watch list. Before we get into it, make sure to like this video below and subscribe to the channel so you can stay up to date on all the quality businesses in the market. Right now, we're looking at the current holdings of my portfolio. Nothing fancy in the presentation here. This is my portfolio return currently. This is an IRR, or basically it's the return that accounts for cash flows in and out, as well as the timing of those cash flows. I believe it's a more accurate reflection of returns when you're always making buys and sometimes sells. So currently, I'm sitting at 22.2% return as of 2023, and this year at a 13.38% return. In total, I've returned 17% since I started picking my own stocks. And down here, I have all of my individual holdings sorted by their allocation percent. I'm not showing what my total amount is for all my holdings. I'm not 100% comfortable with doing that. I will say that it is in the mid six figures. Currently, I own 20 stocks and one ETF. That ETF is this right here, JP Morgan NASDAQ Equity Premium Income ETF, JEPQ. Quick explanation on this. This is purely for the dividends. It has about a 9% dividend yield. It's a covered call fund that essentially tracks the NASDAQ 100. My largest holding, of course, is Microsoft, and that's followed by Visa, Google, Apple, United Health Group, Texas Instruments, Applied Materials, MSCI, Realty Income, Microchip Technology, McDonald's, Tesla, Lowe's, Vici, American Tower Corporation, Costco Wholesale, Ulta Beauty, then JEPQ, Fortinet, Photronics, and finally, Adobe. So it's no surprise that my three largest are Microsoft, Visa, and Alphabet. I would say that Microsoft is probably the safest growth stock bet there is today in the market. It's already garnered me a 30.9% return, and I don't think this thing is anywhere near done in terms of growth. Visa is just another steady Eddie. It's gotten me nearly a 17% return since I started buying it. These are time-weighted returns, by the way, as well. And Alphabet just recently became my third largest holding after I bought into it again after their earnings. As you can see, like I said, I had a 17% total return since I began picking my own stocks. A large bulk of that are my three largest holdings, Microsoft, Visa, and Alphabet. I had some losers as well. I'll go over those real quick. Right now, MSCI is down almost 12% for me. McDonald's has not performed nearly to what I was expecting it to perform at. And my biggest loser is Tesla, down 33% since I started buying it. Keep in mind, these are all very long-term plays for me, so I'm not worried about the losses that I'm looking at right now. They're all, of course, unrealized losses, but it's not fun to see some of your holdings down as much as they are. And of course, I'm also being dragged down by my REITs, Realty Corporation, Vici, and American Tower. All of these I see bouncing back at some point, especially when the interest rates go down. And right now, I do think there's just a lot of fear in the market regarding retail, such as Ulta. And then you also look at Lowe's. Lowe's, I was up pretty well in, but just recently after their earnings, they came down again. My best performing stock has been Applied Materials. I would love to add more to Applied Materials, but sitting at 220, it's a little bit high for my taste right now, as is Costco. Costco has been another excellent performer. It's at just under 2% of my entire portfolio. I wish I had bought it more when I did to start buy it, but up nearly 32% since I have started buying it. At over $810, it is really high price right now. I'm really hoping that their earnings, when they come out this Thursday, it takes another nosedive, because I would love to add more to my Costco position. A few others have bounced back a little bit for me as well. Apple was down earlier this year, but it has bounced back a little bit in the last month or so. as well as United Health. Again, they had some early troubles in 2024, but have recently been on a tear over the last month or so. Right now, I'm fairly pleased with all my holdings. There is one exception to that, and that's McDonald's. I don't think my thesis has played out in McDonald's the way I thought it would. Part of my McDonald's thesis was that they were pushing costs down to the franchise level, particularly for marketing, as well as developing a lot of technology around their app and AI, and essentially enhancing that experience for users. What I did not expect, however, was the backlash McDonald's has gotten towards their price increases. I always thought that they had massive pricing power and that they would be immune to price increases, but I've been wrong on that. I'm not quite ready to sell yet, but it is something I'm thinking about. I would like to see this get back up a little bit more before I sell, but we'll see if that happens. And a few stocks on the smaller side of my portfolio: Fortinet, which has done very well for me, as well as Photronics. Again, Photronics was up for me quite a bit, but after their last earnings, again, they took another nosedive, and I was a little bit early on Adobe. I started buying Adobe when they tanked earlier this year, down around 540. And it has since fallen quite a bit more. But I do think they're very undervalued right now, and it's one of the few positions I'm actively adding to at the moment. I'll get into what I want to add more of, as well as my thoughts on some of the prices around these here in a little bit. If I include my sold holdings, my portfolio return does drop a little bit to 16.8%. And you can see these holdings down here. A lot of these names people may not recognize. These were some of the very first stocks I ever bought into: CF Industries, KeyCorp, MI Homes, Pfizer, Qualcomm, Coca-Cola, West Fraser, and Tyson Foods. I'll show you my final returns on these here in a second. But when I first started, I really was looking for the Benjamin Graham style of value investing, where the book value of stocks were about 60 to 70% of the share price. One I had a thesis on, and that's Pfizer, which did not play out at all like I expected. And I sold that at a pretty hefty loss. And one I wish I held on to longer. That's Qualcomm. I thought Qualcomm was going to be a big loser when it came to their semiconductor niche, which is chips for cell phones, but they have since had a boom, and I definitely missed out on that one a little bit. And Coca-Cola, I actually sold very recently. I sold Coca-Cola about a month ago, and the reason I sold Coca-Cola wasn't because I lost conviction in them or anything, but because I thought there was a better use of that capital. There was a more of a growth opportunity for that money than being in Coca-Cola. And I took my Coca-Cola proceeds, I put half of it into Microsoft, and I put the other half into Google. Okay, so regarding those sells, here is what my realized return was on each of these stocks. Qualcomm, I lost a little bit, almost 7%. My biggest winner was MI Homes, ticker MHO. That was a gain of 56%. I sold out of that late last year to fund some other dividend stocks, and it was by far the best performer of my initial cohort of stock picking. Tyson, I sold at a bit of a loss at 13%. West Fraser Timber, which is a foresting company up in Canada, sold at a slight gain of about 1.3%. KeyBank, I sold at a 4.9% gain. I bought KeyBank after the banking crash triggered by SVB, Silicon Valley Bank, back in 2023. Never truly understood banking, and is why I got rid of it. I never was comfortable holding KeyBank. It was extremely volatile while I held it. CF Industries, they essentially make fertilizer as well as other agricultural-based chemical products, sold for a slight gain at 6%. MLI, Mueller Industries, sold these for a 5% gain. Of all of my holdings in this initial cohort here, Mueller was probably the one I was most reluctant to let go. They're very similar to Fastenal in that they make industrial products for everyday use. They primarily focus on pipe fittings. Pfizer, I already explained, I sold that at a pretty large loss there, nearly 30%. My thesis on Pfizer had to do with an assortment of drugs in their pipeline right after an acquisition they made with Seagen. I had actually worked at Seagen when I was in consulting. I was familiar with the pipeline of drugs there. However, Pfizer, once the acquisition happened, I learned that they had a lot of other problems going on. They were very poor at forecasting the demand on certain products, and I just was not confident in the management that existed at Pfizer once I myself was ingratiated into the company. And Coca-Cola, I sold at a slight gain of 1%. Like I said, I sold this because I thought Google and Microsoft were simply better opportunities. And here's another look at my portfolio, except this is for simple return, which is market value over cost basis. You can see when I'm not accounting for the time waiting or anything, some returns are a little bit different. Tesla, for example, I'm down 20% over my cost basis, whereas Applied Materials, I'm up only 42% over my cost basis. So it's always interesting to look at your portfolio in multiple ways to account for your return, to see how you're really performing. And I do prefer the time weighting, because that really lets you assess your real performance once you remove the timing of your buys and sells. You're strictly looking at gains at that point or losses. So I threw the current price in here because I want to quickly talk about what I think I might be doing with my portfolio here in the next couple weeks and months. Some stocks I would love to add to are Microsoft, Visa, and Google, of course. Those are my big three, and I want those to be the largest part of my portfolio. Google's the only one currently I'm considering adding to at the moment. I actually have about $10,000 or so sitting on the sidelines in cash, and I'm thinking about Google as another purchase. My buy price for Google right now is up to about $195 a share, so I might slowly add to Google over the next few weeks. I would love to add more to Microsoft and Visa. However, I think they're a tad too high for me for what I'm comfortable buying in right now. Microsoft came back down into the low 400s, and Visa sub 270. I'll probably add more to that position as well. United Health is also a bit too high for me. I'd like to see that come down below 500. Apple is a position I had in two different funds. I had a small position in a dividend fund, and a bulk of my position is in my IRA. I kept my IRA, however, I sold out of the dividend portion of that after their last earnings. But Apple is something that I want to hold on to in my IRA for the long-term dividend growth prospects there, although they are not really growing their dividend very much as of late, just over 5%. But I used the proceeds from my dividend fund to buy more MSCI. Texas Instruments is another stock that I've held on for a while. I have zero plans of adding more. I'm pretty comfortable where it is in my current position in the portfolio. I do like the dividend from there. Applied Materials is a growth stock I would love to add more to. However, I want to see it come down to about the 180, 190 range. MSCI is one of my favorites. I see a lot of potential growth out of MSCI. They have a massive economic moat, and they're currently sitting under my buy target of about $500. So I'm probably going to allocate some of my current cash to them as well. McDonald's is one of the only stocks in my current portfolio that I'm actually looking to sell. I'm not as enamored with their growth prospects as I was when I bought, and I believe the restaurant industry in general seems to be trending towards fresher fast food, a la Chipotle. Microchip Technology, another stock that's done very well for me so far. I'm up nearly 21% on this holding. I believe there's a long runway of growth for their niche in the semiconductor industry, and I hope to capitalize on that. Lowe's has been a pretty decent performer. My target price on this is actually about $215. I don't have any plans to add any more to Lowe's, though. I want them as a pretty small position in my portfolio. Tesla is the bastion of volatility. You have to have a very strong stomach to hold on to Tesla. I very much believe in full self-driving. However, it is a very large bet. If it pays off, it will probably be my biggest winner in the portfolio. It's also perhaps my biggest bet in terms of a business without an established economic moat. Costco, I absolutely love. I want to add more. My price target for adding more is at about $740, $750. I'm really hoping they fall back down a little bit after their earnings this Thursday. Ulta, I think is a very undervalued, but I'm not going to talk about them much more. Fortinet has been a very good one for me. I don't have a huge gain at the moment, but I believe there's a very long runway for growth in the cybersecurity space. And in fact, when you see my watch list, I have a couple other cybersecurity stocks on there. Photronics, despite falling nearly 10% the other day, I still have a pretty decent gain in Photronics. However, this is a stock that I do not plan on adding more at the moment, although my buy price for them is about $28. And finally, Adobe. Adobe is the stock I bought most recently. Like I said, I started buying at about $540, but I've been continually buying ever since they had that big fall down into the 400s. And it's actually one of the few I'm actively adding every single pay period. I'm slowly building that position there. So what is currently on my watch list? Right now, I have 17 businesses that I am considering at the moment. Amazon, Automatic Data Processing, or ADP, Cadence Design, which is a semiconductor design firm, Fair Isaac, which is known for the FICO score, IDEXX Laboratories. They manufacture medical equipment for animals. Intuit, which of course is TurboTax, QuickBooks, KOLA, which is another semiconductor equipment provider, as well as Lam Research, another semiconductor equipment provider. Lattice Semiconductor, also in semiconductors. Manhattan Associates, which provides software that manages supply chains and inventory. MasterCard, which is the other half of Visa. Moody's, which is a credit rating agency. Palo Alto Networks, a competitor of Fortinet actually, and another cybersecurity firm, along with Qualys, another cybersecurity firm and competitor to Palo Alto and Fortinet. S&P Global, which of course does credit ratings along with Moody's, and similar to MSCI, does benchmarking. ServiceNow, which provides software for business processes, and Zoetis, which is a drug manufacturer, a pharmaceutical, but for animals and pets. I haven't fully done all my research into these yet. The closest I would say right now, I am on Qualys and Amazon. A lot of these I've run a DCF on, and they're just simply way too high of a price right now for me to even do further research on. I think I had Zoetis, for example, in like the 120s. S&P Global was down in the 350s. The other thing I'm thinking about is consolidation. I really don't want to have more than, say, 12 to 15 stocks. And currently I'm at 21. So there are some stocks that I'm going to have to sell out of and then further consolidate into. And that's really what I'm going to be thinking about over the next few weeks and months. What do I want to cut loose and what do I really want to add? I actually want Amazon to become a pretty big part of my portfolio. I'm still in the midst of all my research for them. I actually think that at $180 right now, they're still a pretty good value, and I think they have phenomenal growth prospects. Another thing you can see here by my watch list, it's very heavy in tech. I think tech really is going to be the growth engine for the United States for the foreseeable future. We as a country are just so far ahead in the tech space that to me it's just silly not to own a vast majority of your portfolio in the greatest growth engine of the last 20 years. And then of the non-tech firms that we have here, MasterCard, Moody's, S&P Global, all very old firms, but with incredibly wide economic moats. MasterCard is essentially a toll collector, and Moody's and S&P are effectively a duopoly. And then the other non-tech outliers here are Zoetis and IDEXX Laboratories. But what are they both focusing on? They're focusing on animals. One thing about human beings is we really love pets. And Zoetis, of course, is really the only large manufacturer of pharmaceuticals for pets. And if you go to any veterinarian, they're going to have to use equipment to check out your pet or any animal, really. If you're a farmer, for example, and you have cows, IDEXX is one of the only providers of equipment specifically for animals. So they have that monopolistic quality. So that is a quick breakdown of my portfolio, what I'm thinking about doing with it, as well as what I'm really looking at right now. I would love to hear everybody's thoughts on not only what my portfolio looks like, but on what I should also be looking at. I'd love to know what all of you are looking at as well, and fill me in on any holes that I most certainly have missed. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.